Welcome to Share Talk, the only podcast where investors come first.
Today we have Julian Cheong, who's the CEO of Bellzone Mining. It's an exploration and development company listed on the AIM market with interests in Guinea. Julian, how are you today?
Very good, Rob. Thank you for taking the time.
Oh, that's good. So today you're going to do a bit of a Q&A session with us about your company. So I guess the first question I'm going to go for is what's your view on the share price and the decline that you've seen the last few months?
Well, I think it's disappointing, clearly, from the point of view of management and the board. You may recall in the run-up to last year, there had been very positive price movement for Bellzone, which culminated in our ability to do a very successful equity placing. We raised about 1.6 million pounds, or about $2 million net. And at 1.25p, that gave the expectation clearly that with dilution, the stock price would certainly come at least to that level. But the stock price has quite disappointingly come down to half of that level, and now even more than that. And I don't think this is explainable really with respect to the turmoil in the equity markets, which clearly there have been. And I think it is incumbent upon management, and this is the reason I'm here, is to talk through the business side of things, and to emphasize that from where we're sitting, there should absolutely be no reason for the stock price decline from the business standpoint. And more importantly, the stock is very, very highly undervalued from our standpoint, and I will be happy to explain why.
To lead on to that answer then, obviously you got a big resource with the Kalaya project. Can you elaborate a bit more about that asset?
Sure. The highlight of Bellzone for many years now, since our listing on the AIM in 2010, has been we have defined and proven that we have one of the biggest iron ore resources in Africa and globally. And actually, there are very few other assets in Africa or anywhere else in the world which is as accessible and which has had as much work done from the exploration standpoint. So from our point of view, we have quite early on, for many years now, defined a JORC resource, which is in the order of 5.6 billion tons at 30% iron content, and we have JORC reserves of 60 million tons at 54% iron content, and this is widely regarded as a very significant deposit, bearing in mind that this is just with respect to one of the two iron ore bodies that we've already mapped out in our concession area. So that in and of itself tells us that there is easily in situ value of anywhere between 200 to 300 million conservatively at a $75 per ton iron ore assumption. It has been valued after our IPO by the market, the very same deposit, at almost $1 billion at the then higher iron ore prices above $100. So you can see that the underlying value, obviously subject to people's assumptions on the medium-term iron ore price, but certainly way above our current market value. That's just the iron ore. And of course, we have made announcements that we see the possibility of an attractive, small scale but attractive ferronickel project. We have identified already JORC resource of almost 80 million tons at 0.69% nickel. And we've done the first stage of our feasibility study to see whether we can really produce our anticipated almost 10,000 tons per annum of ferronickel, roughly 15 or slightly more than 15% nickel content. The net present value of a project like this at the current nickel price is around about $100 million US dollars. So if you add all those numbers up from the mineral deposit standpoint, Bellzone is certainly worth a lot more than what the market gives it credit for now. We obviously have a concession that we signed and ratified in 2010 for 25 years and renewable for a 10-year period subsequently. We have just inked an updated addendum to that convention, which reaffirms the legal status of that concession. So I think we were confident that if people are focused on what value we have in the ground, I think they'll see that there is a lot of value in Bellzone in and of itself. Now, secondly, the strategic value of Bellzone is also, I think, being ignored by the market. We sit about 300 kilometers from the coast via a railway line that we've done a feasibility study for already. This is about 35 to 40% of the way to Simandou, which is, I think most people may know that it's the world's largest unexplored high quality and high quantity iron ore deposit. There is nothing like it in the world. But to get there is roughly an 800 kilometer railway track, of which 300 or so will lead up to our mine in Kalia and then go on to Simandou. So developments in Simandou, which will inevitably happen, will have to go through Bellzone. We have the right under our mining convention to have the right of carriage. We also have the right to participate in infrastructure development as the projects materialize. And also, one thing that people have not given us credit for is we have already spent quite a lot of money. And in total, with over the years we've operated in Guinea, spent almost $450 million US dollars to do our job, but also to build roads and a bulk capable port. So we have a port that is built to a design capacity of 10 million tons per annum. We've tested it and used it to ship up to 1 million tons per annum. And the built capacity is 4 million tons per annum. Now, why is that important? Well, even if people don't believe iron ore production begins imminently, what Guinea allows is the immediate production of bauxite and alumina. And both of those require also bulk ports, of which there are none in Guinea at the moment of any size available. And so new investments from China, in particular, in the bauxite area to the northeast of the capital, they require shipping capabilities, and we have a ready-made port. Now, we're not going to use it for iron ore now until our iron ore production gets off and running, but we have the possibility of working out good economic arrangements with the producers of bauxite and alumina, who will need a staging point to get their material out and over to China. So I think, in summary, our mineral value and our strategic value should enable the market to see value far in excess of where our value was even last year at over 1.6p, at 0.6p at this moment. I just cannot believe that that is reflective even of a small percentage of what Bellzone represents.
Sure. I mean, that's a very good summary of the strategy you've got there. And I think you're right. Obviously, if people were more informed or knew a bit more about it, they could see that. Which leads me to my next question is in regards to news. You've had 2 RNSs out this year, I think. So what are you looking to address at?
Yes, well, good point. We were not really able to commit to regular news feed prior to this because, firstly, the process taken to get our addendum to our mining convention signed was, shall we say, slightly opaque, and we experienced significant delay over the course of 2017. But now that has been inked, our equity placement has been done. We're really now able to move quickly to restart our ferronickel feasibility study, and that is going to start generating real news. Clearly, we don't put out RNSs for the sake of doing so, but we fully intend to keep the market closely apprised of our progress for the ferronickel project. It is also important because the ferronickel project is the milestones related to that are the same as our obligations under our addendum to our convention. So we must show progress to the government as well. And clearly, it makes sense to update the market for each milestone that we hit. So we are now, I can't say too much at the moment until we actually release an RNS with respect to the first achievements of our restart of the feasibility study. That should come imminently. But that visibility has meant that we are able to sign up with ShareTalk, for example, to commit to a series of market updates. And we think that this should give the market at least more visibility and further help the market understand where we stand and reconsider again their position on Bellzone's value.
Great. More than happy to help where we can. With the feasibility study, what's the difference with this one compared to the previous 2?
Well, let me say that the 2013 bankable feasibility study that we did was related to the underlying iron ore deposit. Now, you will recall that iron ore prices up until the end of 2013 were at all-time highs, and the precipitous drop in commodity prices came about towards the tail end 2013, 2014. So we were geared up at that time, and we undertook a comprehensive feasibility study, which resulted in a planning for about $800 million phase 1 iron ore production, and we had basically put together a banking consortium comprising all the major financiers, including the French banks, the German quasi-government banks, and the African Development Bank. We had commitments of a loan package of almost $600 million, and that meant that feasibility study was highly comprehensive, including environmental impact studies and severe testing of the financial models. Now, clearly, all of that went out the window when the iron ore prices fell and when Ebola started in Guinea. So that is that feasibility study is still with us. It's been mothballed, but it's still highly relevant to the extent that iron ore prices pick up. As I mentioned earlier, nothing has changed with our mineral deposit. It's still there. All the factors in Guinea still remain roughly the same. And if anything, the oil price difference between now and then, shipping assumptions, and the other input assumptions are pretty easy to update. So that feasibility study is our iron ore production readiness plan, and that's in our pocket. The second feasibility study that you referred to was the first stage of the ferronickel project. As I said, we had to first start and see whether we were able to extract a good enough sized project from the nickel that was contained in the upper layers of our ore. And we managed to define from the samples that we already had from our iron ore assaying to determine that we do have a good enough deposit. And we had gone almost 50% of the way through to define what sort of beneficiation might apply, and the answer, not much. And so we would only need to crush, wash, and screen the ore to develop as I said, about a 10,000 ton per annum and roughly 15% ferronickel bricks. And we've done the basic work there already, including plant layouts, et cetera, et cetera. Now, because we did not get the signature to the addendum, and therefore firm up a commitment from the government and from ourselves that we had a clear way forward, mutually agreed, it was no point for us to continue after determining that the project seemed feasible. So we stopped and concentrated on saving cash to the extent that we got the addendum signed, then we could continue. So as mentioned, the signing took place in November last year. We got an equity placing done very quickly thereafter, and that meant that we had a lot of visibility to restart the feasibility study. And so now the third feasibility study you talk about is actually phase 2 of the ferronickel feasibility study. The objective of this is firstly to satisfy our government obligations, obviously, under the convention, but more importantly, to get us to the more concrete sense of what the project we can start talking to potential contractors and financing parties and look to kick off that project without delay. And that is our hope, given that there are not a lot of infrastructure requirements. We have roads already in place. We have very little energy requirements. The smelters that we are looking at are generator powered, and we have a modest amount of coal required. So and as I mentioned, we have a port if necessary, but these bricks can be shipped via container from the capital, Conakry. So I think all in, we are very confident that if we can finish the bulk of the technical testing in phase 2 of the feasibility study, the rest of it could move quite quickly. So to sum up, I think the work that we're doing now on the second part of our feasibility study for ferronickel is we need to get our bulk sample shipped to South Africa, where the Pyromet, which is the owner of the smelters that we will use, will put them in their test smelter at Mintech in Johannesburg, and we will get a proper understanding of exactly what type of product will be possible, what type of slag results we will have, what kind of energy requirements, and what the relationships are between the ore and the smelter. and we have some good metallurgical results as a result of that. And then, of course, we may need to do a little bit more drilling to better define our JORC resources, and that would enable us to approach the potential financing parties quickly, and get that project off the ground.
Okay, sure. And you mentioned the placing there in November. This is what you're using the proceeds for, I take it.
Yes, well, because we had been conserving cash and trying not to tap and further increase our debt load. You may recall that over the past 3 years, we have relied on our major shareholder to provide us with a shareholder loan to operate. And so our ability to raise independent equity financing, which of course diluted them somewhat, but that is healthy because it does, it first of all enables us not to borrow more. It does enable us to survive on our own steam and pay our own way. And so that sum in bank has been very important for us to agree a working budget this year, including what we need to do for the ferronickel feasibility study, and make commitments. As you can imagine, it's hard to negotiate with employees and the union. It's hard to plan expenditure for feasibility study if you're not sure where your money is coming from. So that $2 million has been useful to help us work out the bulk of our financing needs. That's been good. And it has also enabled us to show our auditors, and right now we are in the process of completing our audit for 2017, that we have a good going concern capability, and so that the placement proceeds have been useful. We're clearly not going to spend everything immediately, but it does enable us to plan how to spend it over this year.
Great. And well, I think you've answered my next question a bit about what you're doing besides the feasibility study.
Well, yeah, I think we are trying everything we can, as I mentioned, to be independent and self-sufficient. And so we find ourselves now in a position where we have all of our major assets. We have almost 100 of them. So we're talking about cars, trucks, bulldozers, drills, big movable assets. All of them have now been depreciated to zero. And so we have been able to put in place an asset management program quickly. So we've started to identify and monetize certain assets which we have no need for and are pretty much useless to us. And so roughly 15% of our assets by number we have been able to sell satisfactorily. So that has enabled us to generate a little bit more cash. Secondly, we have just started identifying assets that we may not use immediately, but which, because of the increase in mining activity in Guinea, we're able to find people who would pay us money to rent our bulldozers and our other assets. And so that hopefully will generate significant cash as well this year. And the combination of some sales and more useful rentals will enable us to really get going. So I think in addition to the feasibility study, our team is busy making sure that we do not have any idle assets.
Okay. You recently had an RNS, which is about the refinancing of the existing loans. Can you let us know what the implications of that are?
Yes. So in addition to highlighting our underlying value and keeping the market informed of what progress we're making on the feasibility study. I think it's important that we remove any elements of uncertainty with respect to our debt situation. As you know, we have almost $20 million in principal plus interest outstanding to our major shareholder, Hudson. There has been in the past some concern that Hudson may in some way reconsider what they might do and would they want to take back the loan. I think Hudson has been quite supportive. I think it's been clear to the market by granting the loans in the first place, and clearly very supportive of even dilution to enable us to be independent. And they've proven again that they are long-term financial investors. They clearly have no interest in jeopardizing the equity value of Bellzone, and so they have quite happily, shall I say, postponed the loan repayments for all three loans that they've granted us from the end of this year, 2018, to the end of next year. So that removes any short-term concerns in terms of debt overhang. And more importantly, our third loan, which we had stood off from drawing down, we had a $4 million loan that was expiring at the end of March this year. We had drawn down 20% of it. So we have about 3.2 million undrawn. And so, again, to alleviate any potential concerns from the market, it's been important that Hudson has kept that loan available and available until the end of next year. So effectively, they have agreed to be the lender of last resort until the end of next year. So I think there should be little concern in the market with respect to our capability to finance. And so, again, we believe all this should be positive from the point of view of our equity value, and hopefully the market pays attention to that RNS because that's important.
Good. A last question, then I'll get in there. Is the tangible benefits that Bellzone's going to see from all the positive microfactors in Guinea? Can you let us know how you think that will affect you guys?
Yeah, I think all the good news coming out of Guinea, in particular with respect to China, we've drawn attention to the fact, not that we really needed to do that, but the world has stood up and taken notice that the Chinese president has personally committed to a $20 billion infrastructure loan to Guinea to fund infrastructure development over 20 years. And explicitly, the loans is to be guaranteed to three Chinese projects, all three in the bauxite / alumina sector. And the government is already working out plans to use the money to build infrastructure, not just related to mining, but broadly, so including universities, broad power generation, roads, etc. All those things obviously mean that you will have an influx of investor interest because infrastructure is obviously important. Guinea has practically no other industries other than mining at this moment. And, it's home to the world's richest resources in terms of iron ore and bauxite. And so those things have not changed. And what has needed to happen is increasing international investor confidence in Guinea because, like most of Africa, especially Western Africa, where Liberia, Cote d'Ivoire, Guinea-Bissau, there have been concerns about political stability, clearly. But I think the current president in his second term has proven that there is continuity, that democracy, even though it's still punctuated by protests and everything else, still works, and that has convinced international lenders and international investors to come into Guinea. Now, all of that, like I say, immediately means uptick in mining and investments. The direct impact on us clearly has been we're able to use assets by renting them out, whereas previously the sector was quite quiet. That's just one example. But more importantly, because of our strategic value that I mentioned earlier, we fully expect to see tangible conversations beginning shortly with potential investors in the mining space. So it could be strategic investment conversations with respect to our projects, ferronickel and underlying iron ore, or to their projects, which require them to tap onto our existing infrastructure, for instance, Konta Port, or work with us to develop infrastructure, for instance, a rail line into Kalia. I think at this moment I'm not able to say anything tangible. There have been preliminary contacts made with various parties with various interests in Guinea. And I have obviously been highlighting Bellzone's assets in all respects. And I think the feedback that we've gotten has been quite positive. I do sense a real positive change in investor mood with respect to Guinea, and a large part of this in China itself. You can see Chinalco or Chalco, which is the listed arm of Chinalco. They've started to get back into profit. So I think first half of 2017 they reported something north of $100 million in profit. And the expectation is that that would enable them and others to restart overseas investments, which the Chinese government had tried to tone down over the last couple of years. So there is certainly a much higher level of interest in projects in Africa, in particular in Guinea, given that it's become such a highlight of the Chinese One Belt, One Road policy. I think Bellzone, having been in Guinea since 2006, roughly, having over 100 staff, being very familiar with the government authorities and the regional governments, etc., and our ability to understand the production realities on the ground, which is maybe not always the case with overseas investors. They always tend to find some local impediments to what they want to do, and I think I think it's fair to say our team has come up against all manner of challenges in the years that we've been there, and so highly experienced. And so no doubt, we will be sought after in terms of at least our views, if not our sharing of our capabilities with potential investors. So I'm looking forward to that in the next couple of months.
That's great. Julian, it's been great talking to you, and I think you've given quite a good insight into what's happening with Bellzone. So we'll leave it there and look forward to hearing some more news shortly.
Absolutely, and we will be providing more updates in a more timely manner, so look out for it.
Brilliant. Thanks a lot, Julian.
Thanks, Rob.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.